Hey guys, Dave with Moneyology here. Hope everyone is having a great day. Today is Monday, November 11th, 2019, and this is the energy sector review where we'll take a look at some of the main ETFs in the diversified energy space and show you why I believe that energy is about to undergo a renaissance, at least in terms of upward price returns on many sectors and many names within those sectors. We just filmed a video for the premium subscribers where we cover 33 names that are extremely well positioned to do really well over the next 12 to 24 months. I think you're going to see, obviously, in the large caps and mid caps, you're not going to see 1,000% gains, but you'll see there's still 100+% upside, even if oil just goes from where it is right now, around 57 to about 70. So a lot of momentum being built right now, and you're seeing breakouts all over the board. So very excited to share those with my premium subscribers, and I encourage you to become one of those, part of our community. $37 a month at moneyology.com gets you access to all of our premium videos as well as the free videos. And then for those of you for whom $37 is too much, then on Patreon, you're going to be able to do a la carte, be able to buy various sector videos for $10 a month. So check us out, and thank you for your support. And please, if you like what we do, retweet us and show your support that way. All right, so let's have a look. All right, starting with light crude oil contract weekly chart. You see here, this is the very definition of a price breakout. You see the downtrend has been in place since effectively August of 2018, and now it's starting to break out. Now, it happened here, so you might say, well, what happened? What's the difference? The difference is this particular move was this was just a fundamental news story tied to the Saudi oil fields being bombed, and it kind of goes to show you when things are not ready yet, then prices will fall back. But now is different, and it's different than here and here and here because the you can't really see it's not as clear, but the 13 EMA is curling right now to cross above the 26. The 26 EMA is curling to the upside. You see PPO has finally broken above zero. It really hadn't happened here or here yet to this extent. So it's at its highest level since February, January of 2019. Also, now you're above the 50 RSI level, and I think you're very close to an upside breakout. So overall, crude oil looks strong. Here's the daily. You see what I mean? The 13, or in this case, the 13 daily moving average has crossed above the 26 moving average, and it's consolidating here. I think it's going to make a break above that 58 level very soon and make a run towards around 64, which was the previous high. But notice the consolidation around that 61 level is very important, and should it break out to the upside, you're going to see some really nice gains. And as you'll see, or those of you will see in the premium video, a lot of names have already taken out in anticipation of this breakout, and companies typically lead the price of the underlying commodity. All right, so a couple of ETFs that are worth looking into. Clean energy, and this is one that's been in a really nice bull market all the way since December of 19 when it bottomed. Frankly, it was it had a rounded bottom here, and when it broke out in 2017 above this neckline, it really took off. Now, when the markets kind of thought maybe a recession was on their way back in December of 19 and really sold off, this took a hit, but notice it back tested this level, this breakout level. So that was a great risk reward entry of support. And once this downtrend that it's been in, it was in since basically December of 18, right? It was just consolidating. Once that broke right around here, so let's just draw a line right at the bottom here, broke. This was a great entry point, and it really hasn't looked back. It's had some pullbacks, but every time it's hit the 50 RSI level, it's bounced, and now it looks like it wants to move higher back towards that 32 level. So 13 EMA looks strong. It's curled and crossed above the 26. And most importantly, the MACDs are still in negative territory, although albeit moving in a positive direction. So I think you're going to see a really strong breakout here. So first move around 32 level, and I think it's going to break higher thereafter. The Invesco Energy Fund. This one you see is in a symmetrical triangle right here, and you've got the moving averages curling, kind of serving as a like a cup support, and it looks like it's going to break. It's already above the 50 RSI level, consolidating here a while, and likely headed towards that 1850 area first target. Here's the equal weight energy ETF, the RYE, and notice again it's consolidating and slightly breaking out. It's struggling just a little bit around that 50 RSI level, which is no surprise. But it looks ready to go, and I think it's going to be well on its way towards around 53, followed by 63. All right, so this is the leading ETF in the energy space. This is the XLE. And again, we're very, very close to an upside breakout. Notice momentum has already broken out, and that's very, very, very important. The MACDs are in very strong positive territory, their highest levels, frankly, since, again, February of 2019. And I expect XLE to make a move towards that 76 level as a primary long-term target. MLPs. So MLPs are actually, despite energy doing well, are breaking down. So that's an area that's very interesting. Not sure why that's happening, but uh, you would think that with energy breaking out, this space would do well, but it's not. So you don't want to be in MLPs right now. It could not break above the 50 RSI level, and looks like it wants to break below 30. And if that breaks below $8, it's not going to look so good in the MLP space. I'm going to do some due diligence on actually why this is taking place, and perhaps we'll cover it in a future video. But this is the beauty of technical analysis: is you don't have to know why it's happening; it just is. And now the why is important in terms of perhaps there's an opportunity for a value play here, but in terms of price, the market and all its intelligent participants are telling you what's actually taking place. Natural gas. So natural gas, notice we've had 3 consecutive higher highs in momentum. Now we're at that downtrend level. So if we can break above that level, then I think you're going to make a move at a minimum towards that 13 level in on this ETF. Notice PPO is above excuse me, is above 0, and I think this is very, very interesting bottoming action right now. So it's got a ways to go, but I think there's a lot of potential. I pointed out Nigeria in the past. Nigeria is a very oil dependent nation, and so a lot of the companies within this ETF are oil related names, and even though we're still hovering around those bottom levels around 12, notice we're creating higher highs in momentum here and here, and we're now above that 38 level. So I think this is going to make a pop above 1350, and when it breaks that 1350 level, that's when you guys want to be in a name like this. It's a diversified frontier market, and so it's got a lot of risk, but the upside, it can run really fast, just as you saw it do back in 2017. So really liking this play right now, and for a longer term diversified global market. All right, so nuclear energy NLR ETF, and so unlike the URA, which is more towards producers and explorers, this is more of utility ETF, and this one is interesting right now at the 38 level. It needs to hold those levels. If it doesn't hold those levels, then this could really break down towards 45, 46. This is not a this ETF is not a barometer on the actual uranium speculative market, but it's it's still in the energy space, so I did want to cover it, but it's not looking so strong right now. So take that for what it's worth. Oil, gas, and equipment services, EXES. This one's consolidating. Still kind of can't seem to break out of its woes. Below $8, I wouldn't want to own this. However, I do want to point out that it's just creating higher highs and higher lows, and it's consolidating right at that 38 level, and looks like it's about to break out to the upside. But I've been saying this for a while, so until it does it, about doesn't matter. It's you need to see confirmation. Oil and gas exploration ETF. Here again, you've got that double bottom, but with positive divergence here, positive momentum highs. And now you're approaching this trend line again. If it can break above there, momentum has already done so. I think that this one's gonna get ready to go, and it's gonna fly once it actually breaks out. Oil services, OIH, same sort of product here. Double bottom, positive divergence. Momentum has already broken out, and this is a sector, and these sectors, with the exclusion of the NLR ETF, I would want to own companies within these sectors, and those are the ones that we're covering in our premium review. And small cap energy. Also, it's been absolutely obliterated, and it hasn't seemed to be able to break out above the $8 range. But again, building momentum, and it's gonna break. It's gonna pop sooner rather than later. But for me, I want to own this above 8, not below it. And finally, the Wind Energy Fund ETF. This one has already broken out here above 13 and above the 61 RSI level. This looks really good risk reward entry above the let's say above 13 here, with a stop loss below the 26 EMA around 1320 presents really good opportunity. Also want to cover one more thing here, which I don't see right now. And this is solar. Not sure where that went. Hmm. Here we go. Guess you want to hide from me. All right. So solar was one of the leaders in the alternative energy space for quite some time, and it's been pulling back. It's had negative divergences for several new highs there. So finally pulled back, and it looked like it was gonna. It broke below 50 and looked like it was gonna break down. But I think this is a fake breakdown, guys, and I think that this is a beautiful back test above this neckline breakout here around 27. And I think this is going to break to the upside. So this could be a great opportunity. So for me, I want to see confirmation. I want to see break up back above that 20, let's say about 29 level. We're at 28.11 right now. So if it breaks above 29, that's a strong indication that it's going to resume its upward trajectory, perhaps make a move all the way back towards that 46 level. So obviously it's had a pullback, but pullbacks are very healthy, and I think it's getting ready to go to the upside. If I'm wrong, then the stop loss below 27 will take you out, and very limited downside. So that's it, guys. Thank you very much for watching, and appreciate all your support, and consider us for premium. Take care. Have a great day.